Tax season is officially over. Make sure you make these 3 important changes. I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Every year, when you get your taxes done, you need to ask yourself 3 questions, okay? In the process of getting your return done, but you haven't signed it yet, you've got to ask yourself these 3 questions. First is, before I file this return, do I understand where all the numbers came from? Is it an accurate return? Okay, so this is your double check to make sure that you've captured all income sources, you've gotten all the right deductions, all the right credits, that it's accurate, okay, that you haven't missed anything. And a lot of people do have that concern when they're filing their return. Well, did I miss any deductions? Did I miss any tax credits? That you want to go through that process. Typically, you're going to want to do that with your CPA or your tax advisor. They're going to go through the return with you to make sure, double check everything. It doesn't take long. Double check everything and then talk through what deductions, what credits you get, and see if there's any others that you're eligible for. So that's the first question. Do I understand where every number came from? Is an accurate return? That sort of thing. Second question is then, before I file this return, is there anything I can do right now to improve this return? There's some tax planning strategies you have up until April 15, but 18th this year, to fund and improve last year's, like an HSA contribution, IRA contribution, even Roth IRA. You can fund those up until the tax filing deadline for last year. So before you file your return, you want to look at those potential tax planning opportunities to say, is there anything I should do to improve this year's return before I file it? Now, the third question then, every year when you're getting your tax return done is, are there any changes in my tax situation, my financial life and my tax situation, that I need to adjust right now so that a year from now I don't show up with a big tax surprise? And that's the purpose of this video. What are the big changes that, as you're asking that third question, what are the big changes that you need to be aware of? And with it being tax day right now, the tax filing deadline for last year, by now, you need to either have answered this question already or answer it right now and make some adjustments. The first, an easy one, more logical one, but people miss it all the time, is, have there been any life changes in your life that should require or should influence your tax withholdings? Okay, so what are these potential changes? Well, did you get married? Number 1, did you get single, right? So that could have you influence your withholdings. Maybe want to change your W-4, how much is being withheld. Did you have a child? Did your child turn 17? The child tax credit is available as long as your income's below certain thresholds. They've increased those thresholds over the past few years. But for whatever reason, once a child turns age 17, the year they turn age 17, you no longer get that large child tax credit. It reduces to a smaller dependent credit. And so that's a big change. You still think of that individual, they're 16, they just turned 17, they're still your child, they're still your dependent, you're still covering basically all the bills, and yet for some reason, there's a big change in the tax credit. So did your child turn age 17? Did you have a child go to college full-time? Did you have a child graduate from college full-time or go from full-time to part-time? Okay, that's a lot about kids. What about you? Did you change jobs? Oh my goodness. I've seen this so many times in my career where someone changes jobs, they fill out their W-4 in the same way or what they think is the same way, and they don't realize it, but their withholdings are wildly different and they show up with an enormous tax surprise. So did you change jobs? That's a reason to check your withholdings. Did you start a side hustle? Or do you have a small business? Did you start a small business? And is the income going to be different this year than it was last year? Those are all, that's not even an all-encompassing list. There's a lot more, but those are all sort of personal personal life changes that influence your tax picture and should influence your withholdings. Now, depending on your answer to those, if they're all no, then it should, maybe your withholdings likely stay the same. But if you answered yes to any of those, well, you may want to increase your withholdings. You may want to decrease your withholdings. You've got to do a multi-year tax analysis, tax projection, working with your CFP to see what adjustments you need to make. So that's the first potential change, and that is any life changes that should influence what you're withholding. Now, the second change is, do you have any changes in your tax shelter strategy? Tax shelter strategy, well, what is that? That sounds pretty geeky. Well, how much are you funding to your 401k? Are you using pre-tax or Roth? Are you funding an IRA? Are you funding a Roth IRA? Are you funding an HSA? Are you funding a 529 plan? Are there any changes with those, and should you make any changes with those? Because those, obviously, that makes a big difference on your tax return. I have shared, we have shared, your CFP has shared, that deciding to go pre-tax or Roth in your retirement contributions, that should be an annual decision. When there are changes, either in the amount of income you're making, or who in the household is working, or tax rates, or whatever, you want to just double check, hey, I've been funding pre-tax, is that still the right approach? I'm funding Roth, is that still the right approach? And possibly make a change. So the second change that you've got to consider right now, or when you file your tax return, is, should I make any changes to my tax shelter strategy? Well, even if you shouldn't make any changes, there are changes being forced upon you. Now, what is that? Contribution limits have increased. Contribution limits have increased. And I would encourage you, we would encourage you, every single year, increase your contributions by at least 1%. At the beginning of the year, you'll barely even feel it until you get to that point where you're maxing it out, or till you know for sure that you are saving the right amount for retirement. And those contribution limits, those have increased prior to this year. Your contribution limit to 401k, 403b was $20,500 if you're younger than age 50. It's now $22,500. And for catch-up, if you're age 50 or higher, it's $7,500. So if you're 50 or higher, that catch-up, adding that catch-up on the normal contribution, that's 30 grand. IRA contributions, Roth IRA contributions, last year, the limit was $6,000, now $6,500. That catch-up contribution is still $1,000, but that means that, an extra $500 that you can contribute there. HSA contributions, that went up a couple $100 as well. And depending on which state you live in, we're headquarters where I live in Indiana, the tax credit, the state tax credit that you get, not every state offers this, but in Indiana, they offer a state tax credit, and the credit stayed the same, the percentage stayed the same, but on a higher dollar amount. Instead of a credit on $5,000 that you contribute, it's a credit on $7,500. Those are all changes to your tax shelter, and you need to consider, well, should you be making a change in your tax shelter strategy? Does that influence your taxes, or how does that influence your taxes? And then the third change that you need to be aware of right now is changes with your budget. And why would I even bring that up when we're talking about tax changes? Well, if there's a life change and that requires that you change your withholdings, well, that's going to change your take-home pay. Either increase it if you can reduce your withholdings, or it will reduce your take-home pay, tighten that budget if you have to pay more in withholdings. Also, if you make changes to your tax shelter strategy, that's going to influence your take-home. Notice and recognize that if you've been funding pre-tax and all of a sudden you talk to a certified financial planner and they look and say, you're in the 12% tax bracket. The hope is you're still early in your career, you're gonna make more in the future. You should be funding Roth right now. Making that shift is going to mean that you're gonna have less tax deduction, therefore more taxes will be withheld. And even though you're contributing the same amount towards retirement, your take home is gonna be less. So those those first two changes will impact your take home pay. And most often, so it takes money to save money on taxes, takes money to save money. And what that means is less take-home pay, and therefore you've got to update your budget to make sure everything is still in balance. So which of those changes apply to you? Have you answered all three of those questions? Work with your certified financial planner. This is all part of the tax planning process. Tax planning is one of the 6 areas of your financial life that you've got to look at all together, all at once, not have one goal or one objective for each of those 6 different areas. You've got to look at them all and have one goal, one plan that aligns all 6 areas of your financial life. That's the job of your certified financial planner. If you don't have a CFP that's helping you with that, contact one on my team. You can find us online, Korhorn.com, that's Korhorn with a K, wisemoneyshow.com, you can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.